Okay, what about now? Is the sound okay? So sorry for this issue. I think it now should be.
Okay, what about now? Is the sound okay?
Yeah, looks like it's working. So I have to update my softwares here, and it looks like that source for microphone has changed. Okay, so it looks like that everything works fine. So once again, let me start from the beginning. I mean, we had a pretty interesting reactions on the markets, as you know. The main story, the main theme of the start going into this week is obviously the Japanese yen. Financial authorities intervened in the FX markets to support Japanese yen. So we have seen a pretty volatile price action, as you know. There were plenty of speculations that sooner or later this will happen, that they will intervene, but still dollar yen managed to reach 160 before it came sharply to the downside. But this can be only just temporary events, as you know. Intervention may not work maybe forever. I mean, there's certainly flows will change when market conditions will stabilize, will slow down a bit. There can be new flows around the corner, and it doesn't mean that Japanese yen will just continue straight to the upside from here. Okay, there will be definitely some bumpy road towards these reversals, but we will focus on Japanese yen a bit later. Before we go to other charts and markets, I want to bring attention back to dollar. Why we are looking at the dollar? Because, as you know, this week we have Fed and manufacturing PMI on Wednesday. Rate decision is few hours later that the same day. Then we have jobs data on Friday, services PMI also on Friday, Swiss inflation reports on Thursday. So everyone somehow expect that Fed will obviously stay on hold. More importantly, it will be we will be looking if there will be any kind of a new hawkish tone or maybe dovish tone. I mean, there are speculations that Fed maybe will look for only one rate hike, or one rate cut maybe in December. But if maybe odds will be decreased, then we will see the dollar will possibly rise even further. However, the inflation problem is global. Okay, so it's not only the dollar that may rise. We have seen last week that Aussie has made a pretty impressive run to the upside, because it was the first time since November of last year, I think, that inflation in Australia came out stronger. So it's not only the dollar story. If the inflation is the problem, then of course even other currencies can see such moves. So I'm not surprised that actually Aussie has seen a pretty nice move to the upside. We have also seen that stocks stabilized, shares in China rebounded, and all of this suggests that maybe dollar may not see any kind of aggressive move to the upside. Okay, even if we see dollar index, we will see dollar index maybe moving to the upside. It could come from the weaker euro, because euro hasn't really moved much last week. It was complete the opposite when you look at cable or maybe some other currency pairs. So what we are looking here on dollar index is still we are tracking consolidation away from 2023 lows. Can potentially be a triangle. It's definitely possible if 107 will hold as a resistance after these 5 waves up are completed in wave C, or possibly if we break 107.50, then of course higher resistance would be around 108 to 109. But still, very important price action is this 5-wave drop from 2022 highs, which suggests that this recovery is now just temporary, but of course it can be much longer and possibly even higher before dollar will really come back to bearish mode. But I still believe that in the second half of this year, this reversal towards lower levels on dollar index could really show up still. I mean, in upcoming months. Now, of course, as I said, euro dollar could be maybe the main driver why dollar index could potentially see maybe another spike towards 107 or something, because the euro is very weak and we know how the dollar index is calculated. So looking at the dollar, at the euro dollar itself, it has a very overlapping recovery here. Looks like it can be wave 4, so possibly maybe a final push to the downside, and then let's see if the market can really stabilize at a new swing low. So if I would have to pick pair, okay, that I would be where I would be trading dollar longs, then of course my first thought would be looking at the euro dollar shorts, okay, because as I said earlier, euro looks really weak, much weaker compared to pound or Aussie or any other, or some of the other major currencies, okay. So if something really changes here, or if dollar will really see some very big pullbacks against Aussie as well, which has been very strong last week, then I think that euro dollar can be easily back at the lows, okay. But since we have some very nice price action on cable and Aussie, here's cable by the way, I just think that maybe it's better for me to avoid the euro for now, because I always want to somehow focus on clear patterns, okay, especially when it comes to trading decisions. And if you look here on cable, we had a pretty nice rebound here from 2023 lows, okay. It can be counted easily in 5 waves as an impulse, and now what we are seeing is a counter trend movement is in 3 waves. Now last week, if you recall, I discussed that market broke below the lowest trend line of this potential base channel, which could be indication that we are falling in wave 3. So as I said, to make sure that this is really wave C and not wave 3, you have to see an impulsive reversal and ideally overlap with this level at 12540. This overlap is very significant, very important, because it invalidates bearish impulsive structure, okay, because wave 4 must not trade territory of wave 1. So now when we have this overlap, I'm confident that we will see further rally on pound. Not only that, we can easily count this rise from that lows in 5 waves. So in my opinion, as long as we are holding above 123, I think that there can be more upside. Of course, there can be some setbacks here still in the short term, so 124.50 or so, this could be a potential support. But I really think that we can retest the upper trend line of this channel, potentially even break higher, and then, as you know, we could travel much higher here. So in my opinion, cable is looking quite good, at least for the short term, for more upside while this low is in place. If this low is broken, then of course my interpretation, the current one, is wrong, and I will have to adjust my views, and then obviously much deeper correction will show up, and then maybe we'll have to wait on bulls and give it another try after the next bounce. But as it looks right now, I think it's pretty nice wave structure right there. Also, if you look here on Australian dollar, now last week we talked about this lower side of this potential very big triangle, okay. We reversed pretty nicely away from that area. Also we had this divergence that we also highlighted on the MACD and on the RSI. So what's probably the most important right now is that you still realize that we are trapped in very big ranges here. But if we bottom at the lower side of the range, we could maybe travel to the upper side of this range. Also, to support this idea from an Elliott Wave perspective, you want to see this impulsive reaction from the most recent lows. And if you look closely here on the 4-hour time frame, well, for me that looks like an impulse, okay. So I think that more upside can be coming. Of course, nothing will move in straight line. Ideally there will still be some setback, some pullback here to maybe look for more upside, at least towards this upper side of the range is 6650 or so. Well, I'm looking this to be my my minimum objective, is because I realize that maybe the whole price action, okay, if I hide this for a moment, that the whole price action from February can even be a flat formation, and you will see possibly this very strong resistance here. Okay, but still, because also stocks in China made some very nice and impressive rebound. Okay, here actually here's the Hang Seng Index. You can see a pretty nice broken neckline right there. Okay, so as you know, targets then for the head and shoulder pattern would be much higher. Okay, you can see from a breakout point it's a much higher, but since I like to use the measurement targets based on the Elliott Waves perspective for a wave C, this comes in here around 1845. Okay, so around there it's a very nice upside projection, minimum projection. So this can keep ASI, in my opinion, in uptrend, because if you look closely here, you can see that both bottomed on the same day. Okay, so if Hang Seng Index is really headed to for further gains here, I think that Australian dollar will also recover further. Also, if you look at copper, there's just a very nice, very strong recovery mode, and usually that's indication for good for higher ASI, because as you know, copper is used a lot in production, and of course this is good for China, and they obviously they buy a lot of copper from Australia. Now let's take a look also on dollar yen. So as you said earlier, dollar yen has made a pretty impressive, very strong move to the upside. So what we have seen, where market moved towards 1990 highs that goes up to this 160 level. So it was a retest of this level before market came to the downside, and looks like that Japan intervened right on the day when there's a holiday in Japan. So it's pretty interesting, very strong volatility. We'll see what will happen in the rest of the week, but I certainly would not be surprised maybe if market will just move sideways now and just try to come down before we may see in the next potential direction here. But if you look closely on a smaller time frame, from that high to these levels that goes back to 155 or so, where we also have this trend line, you will actually see that this can be an impulsive reaction lower. So maybe after some slowdown here, we could potentially see more weakness. Okay, and looking at the daily chart, of course, I don't want to give impression of any kind of a very big, very huge reversals, but certainly it's important to note that if this is move out of a triangle, then at some point the price will come back into this triangle range. Okay, and I still think that's a very possible scenario, in my opinion, to see dollar yen coming back into this area maybe by the end of the year. Okay, also not only dollar yen, we have also a lot of other yen crosses, obviously, that are showing some very similar price action. I mean, here's euro yen. Looking at weekly time frame, we just spiked here into these levels that goes back to 2008, and we've been looking for this recovery into this area, and I think that now can be time for a slowdown, because if you look here on a daily chart, you can actually count potentially 5 waves up, and we have seen a very nice 5 waves within wave 5 towards 161.8% extension of this wave 4. So that's a pretty significant, but of course, to make sure that that's really a top forming here, would be nice to see an overlap with this price. Let me be more exact here, around 165.45, because if someone thinks that was wave 1, wave 2, wave 3, well, this price, this current drop should not overlap then this area, 164.45. Okay, so I think that at some point we will also see a deeper pullback, at least 3 wave retracement on this pair as well. Okay, so not only euro yen, dollar yen, there you have also other yen crosses. Even yen could see more upside versus maybe ASI that has been quite strong. So I still think that all of those major yen crosses could experience some very important reversals still this year. I'm not sure if that's the top, because if it's intervention, everyone will try to ride these flows, and maybe will not be such an easy trade. And keep in mind that there are very volatile conditions right now, and obviously if you're trading these currencies, you have to be very careful, and I recommend to lower your size significantly. Now, looking at crude oil, still somehow is looking to be slow when situation in the Middle East come down a bit. What we are seeing is still a counter trend movement, so I think it can be wave 4 correction. We are testing this trend line of potential corrective channel here, and if we rally back above 84.50, I think that this will be a new indication that maybe crude oil is ready to print higher prices. On the opposite side of that, if we start breaking back below $80 per barrel, then I think that this market will just stay sideways, and then I would even tend to look for a triangle to be my primary interpretation. Okay, but for now it's a little bit too early to say that we are in a triangle, because as I said, this current pullback from the from start of April is actually looking corrective, so I have to be aware of more upside, either into this wave C that belongs to a triangle, maybe even of a higher degree ABC rise that will take us back towards maybe even $100 per barrel here. Also, let's take a look on German DAX. So last week we talked about this one. We said that we had a pretty nice break out of this corrective channel, and we retested it very nicely, and now we also moved back to these highs that were seen last week. So I think that that's a pretty nice solid wave structure that is pointing even higher. Of course, there can always be some more consolidation, but as long as we are trading above that level here, 17,400, I just think that there is room for more upside. So watch out for potential risk on flows. We will see how the US stocks in the US will trade this week. It's worth to know that nvidia, okay, had a very nice rebound here after 3 waves of a pullback. So we stopped at 38.2%, and I think that this can actually keep this market in bull run for a 5th wave. So despite some very serious sell-off that we have seen on stocks 2 weeks back, I still think that this market is doing quite well. Even if we see, let's say, nvidia coming back close to these highs, back to all-time highs, it doesn't mean that S&P 500 or technology sector as a whole will do the same. Maybe these major stock indexes will just correct towards higher prices, but I think that for now it certainly looks like this can be the case. So I just think that if these risk on flows will really be seen, of course it really depends what Fed will do, what will be the message, but I just don't think that they will get any kind of a new important details. They will keep focusing on the next important data, and they will just maybe cut rates later this year, if any. So I'm not really sure if we'll see any kind of surprises here. Now let's take a look also on gold. So gold didn't move much recently. I still think that we are here in a corrective formation, can be a deeper ABC. I don't think it's right point to say that wave C has bottomed here, because I do not see impulsive characteristic here on the smaller time frame. So maybe yes, we could bottom, or we can retest this 2270 level. So both cases are still valid. Just don't be surprised if we see drop towards 2270 and then turn to the upside. Also, I have another interpretation here. Okay, let's assume that maybe wave 3, big higher degree wave 3 has ended here, and you stepped into wave 4. Okay, so then normally you would expect that this wave 4 would be much deeper, because it's a higher degree correction. Then I would be expecting something like that, And in such case, I realize that maybe first leg for a wave A could be even a leading diagonal. But what's good about that is that even if we see a leading diagonal forming, which by the way is a reversal pattern for a deeper price action, as I said, then you still should see some kind of a support around 2270. Okay, so even from that bearish perspective, okay, I still see this as a very important level. But if this level is broken significantly, let's say in the next 7 days or so, then, or maybe even more, then of course I would completely try to avoid gold, because then definitely I don't want to be on this one, because I certainly would maybe just realize that this could later on even become 1-2-1-2 bearish scenario, and in such case you want to avoid trading this market on the opposite side, obviously. Okay, so 2270 is the next deeper support if we will get towards these levels. But my primary wave count, as I said, still suggests that we are in a smaller degree wave 4 here. Okay, also looking at silver, pretty nice, very strong break higher here for $25. We are seeing very nice move close to this highs that goes back to 2021. We are now making a pullback. Some very nice, interesting supports are being tested right now. Okay, so I think that both metals are coming into some very interesting levels. If you're more like a short-term trader, then maybe some just temporary bounce could be enough for you to make some money on the upside. From a longer term perspective, I just think that analysis should remain the same. We have seen a 5 waves up from these 2020 lows, then a counter-trend movement. So to complete this whole pattern, you have to see a break above that high that goes back to 2021. Okay. Okay. Now what we have else here, we have maybe let's take a look on cryptocurrencies. Okay, so by the way, just forgot to mention it earlier, if you're a first-time visitor here on our YouTube channel, please subscribe, press a like, leave us a comment if you're watching this recording later. Okay, if you will be interested in more analysis, visit us at wavetraders.com. Okay, but these webinars are regular each Monday for free. So let's take a look now on cryptocurrencies real quick here. Okay, I will not show everything, of course, because I can't, but looking at the crypto total market cap, okay, that's the most important. So I'm tracking actually 2 wave counts, and this one is still valid. It's a 1-2 bullish scenario, but I really would not say that we are in this scenario unless we see 2.4 trillion swing resistance broken. Then we could say that we are headed much higher, because this bounce from the most recent lows can easily be counted as a corrective, because it's in 3 waves, and always when you see a 3 wave movement, okay, it's very hard to say that that trend is turning. So it's very important to see a 5 wave structure. It was much easier to call bullish one, temporary one, when we have seen this first reaction higher. But now when we have 3 reactions higher, then it means that we have to be patient and wait on some key levels to be taken out before we may confidently call the next direction. So since I realized that this could easily be only ABC rise, could represent wave X or something else, could even be wave C within a bearish triangle here for wave B. So even this interpretation is valid, but what's good about this is that in both cases, move from that highs that goes back to March is corrective. Okay, just timing, it's just, and structure, it's a tricky one. Okay, we cannot always be perfect on timing here, so that's why you have to understand that there can be always a little bit deeper pullbacks, and if you are maybe looking for some longer term trades, investments, then of course you will take this into your advantage. But as a short term trader, I really would have to see an impulsive reaction higher to make sure that we are bottoming. And with only 3 waves up here, I just don't think that's the case. But if we are starting to see rise and break above, let's say as I said, 2.4146 trillion, then this would be a different story. Okay, then I think that much more aggressive bulls could finally show up here. Okay, now since I mentioned this, of course, Bitcoin has different possibilities. Here's one of our alternate counts. If we go lower, it doesn't mean it's bearish. It just deeper support would be around between 56 to 59,000. Maybe market has to liquidate a little bit more longs before it will finally find the real direction. But even this one is definitely possible if we recover above this recent swing highs that goes from last week. But somehow I really like maybe Ethereum much more. I mean, here if we look at Ethereum versus Bitcoin, okay, it has a very nice deep retracement. We reached some key support levels, and even this shorter term price action down can be now in late stages here for this wave 5 of C. So if this thing is really turning around, then you know that alt season could be here, and you will have a lot of interesting opportunities, not only on Ethereum, but most likely on some of other altcoins as well. Okay, so we will keep posting and updating other altcoins as well on our website. Okay, traders, I hope that you enjoyed this presentation, this webinar. It was shorter one because we have a lot to cover still today for the premium services, because as you know, our markets can be a bit volatile. So if you are interested in more, make sure to check us at wavetraders.com, or just look for some free ideas that we regularly share on our website in free section. Traders, trade well, be careful, and talk to you soon. Bye.